Hey there, today we're going to be reviewing chapters 13 through 16. In these we'll be covering production, risk management, consumers in the global economy, and money management. Extraction and cultivation is the process of obtaining products from nature or grown using natural resources. This ensures that there is an available supply of natural resources. This is the most common form of production. Processing involves changing and improving the form of another product. Few products are used exactly as they are found in nature. Even something as simple as water must be filtered and treated to be used in production for other products. Manufacturing is the combination of raw materials and processed goods into finished products. These finished products are either sold to consumers or other businesses for production of their own products. Mass production is an assembly process that makes a large number of identical products using a continuous, efficient procedure. This is most often used in automobile assemblies or beverage bottling plants. The central processing unit, also known as the CPU, is the control center or the brains of the computer. The CPU has many tiny wafers which carry data using electronic pulses through the computer. Material processing is the act of changing the form of raw materials so that they can be consumed or used to make other products. The two types of material processing are continuous processing and intermittent processing. Applied research studies existing products to develop design improvements or new product uses. Engineers study current designs to improve efficiency by using this process. Pure research is done without a specific product in mind, with the goal of discovering new solutions to problems. The production process consists of the activities, equipment, and resources needed to manufacture a product. If mass production is the chosen strategy, the business must organize an assembly line. Continuous process improvement, or CPI, increases the quality of work by reducing errors, inefficiency, and waste. This is done by constantly reviewing and searching for improvement in the process. Logistics is managing the acquisition, movement, and storage of supplies, materials, and finished products in a business. Logistics has become a very important part of business operations in the recent years. Just-in-time is the use of logistics to have goods arrive when they are needed, or just-in-time for production, use, or sale rather than just sitting in storage. This requires careful planning and coordination from everyone in the business. An operational plan identifies how work will be done, who will do it, and what resources will be needed. In a production context, an operational plan determines when each product will be produced. A schedule is a time plan for completing activities. These match people with resources to make sure activities are finished on time. A standard is a specific measurement against which an activity or result is judged. Businesses set standards for key activities to make sure quality is maintained throughout their products. An economic risk can result in financial loss. There are three categories of economic risk. The first is personal. This can result in poor health or well-being. The second is property. This may be the loss of money, vehicles, or buildings. Liability is the harm or injury to. Pure risk is defined as something that can present loss but no gain, such as severe weather. Controllable risk, however, can be reduced or eliminated by actions that are taken. Insurance is simply defined as the exchange of the uncertainty of a possible large financial loss for a smaller payment to an insurance company. An insurer agrees to take on certain economic risks and to pay for the losses if they occur. The insured is the person or business which, for the insurer, assumes the risk of. The person or company purchasing the policy or insurance is known as the policyholder. The insurance policy states the conditions to which the insurance company and the policyholder have agreed to. A premium is the amount the policyholder must pay for insurance coverage. A claim is a request for payment for a loss that the policy covers. Property rights are the exclusive rights to possess and use property and its profits. This excludes everyone else from interfering with the use of the item. Counterfeiting refers to illegal uses of intellectual property, patents, trademarks, and copyrights. An example is making small adjustments to a product to illegally sell that product in another country. A unit price is a price per unit of measure. This is used in most stores as a way to help customers compare various brands and sizes of a product. A brand is a name given to a product or service to distinguish it from similar and competitive items. Brand names are designed to help build customer loyalty to that brand. Impulse buying is buying something too quickly due to a nice display that is likely to be seen by the customer. An example of this is setting a product next to the checkout register that is very visible to the customer. Consumer movement is when consumers unite to demand fair treatment from businesses and fight against unfair business practices. Fraud occurs when consumers are given false information in an effort to make a sale. An example would be turning the odometer of a car back 30,000 miles and not telling the customer that is buying the car. A guarantee is a promise by the manufacturer or dealer, normally in writing, that a product is of a certain quality. This does not have to be applied to the product as a whole. It could only be to some parts. An express warranty is made orally or in writing. It promises a specific quality of performance. This can be in a statement such as, "The working parts of this watch are guaranteed for 1 year." An implied warranty is imposed by law and is understood to apply even though it has not been stated. This law requires certain standards to be met for certain products. Mediation involves the use of a third party who tries to resolve the complaint between the customer and a business. This normally leads to the compromise between the consumer and the business. Arbitration results in a decision that is legally binding. After hearing both sides, considering evidence, the arbitrator makes a decision that both the business and the consumer must abide by. A class action suit is legal action by one party on behalf of a group of the same grievances. In this, the settlement may result in a refund to all customers involved. If not all can be identified, funds will be given to education programs. In small claims court, disputes are resolved quickly and inexpensively. The rules are simple and informal, and the disputes must be under a certain amount ranging from $1,000 in some states to $10,000 in others. Money management refers to the day-to-day financial activities associated with using limited income to satisfy your unlimited needs and wants. This means getting the most for your money through planning, saving, and spending. Personal assets are items of value such as money in bank accounts, investments, furniture, clothing, automobiles, or jewelry. The total value of these assets is the first thing on a balance sheet. Net worth is the difference in assets and liabilities. This represents what could be claimed if all assets were sold for cash and all debts were paid off. This is also referred to as owner's equity. A cash flow statement reports net wages and other income along with spending for a period. This could be for a month or a year. Fixed expenses are costs that occur on a regular basis and are the same amount each time. Examples include rent, mortgage payments, and insurance premiums. Variable expenses involve living costs that differ each time and may not be as easy to estimate, but still must be included in the budget. These may include food, clothing, and utilities. An allowance is the amount of money you plan to use for a certain budget category. There are 8 common divisions, but they can be different depending on the situation of the family or the individual for the budget. Budget variance is any difference in the amount that was budgeted for a category and the amount that was spent. This is checked by totaling all columns at the end of each month. A tax is a charge imposed by a government to finance public services. Most people pay taxes in 4 major categories: purchases, property, wealth, and earnings. Earned income results from wages, salary, commission, fees, tips, and bonuses. Investment income, however, is the result of earning dividends, interest, or rent. A tax deduction is an amount that reduces taxable income. This is available to all tax-paying citizens. As an alternative, the taxpayer may itemize their deductions. The rules regarding this are very strict so that it cannot be exploited against tax laws. An exemption is a tax deduction for the taxpayer, spouse, and each dependent. For each exemption, taxable income is reduced a set amount. These dependents are normally children, but as long as they meet specific requirements, they can be any age. Taxable income is the amount on which taxes are calculated. This amount results from subtracting adjustments to income, deductions, and exemptions from gross income. Tax credit is an amount subtracted directly from taxes owed. These may be obtained for children care expenses or even low-income workers. A financial plan is a report that summarizes your current financial condition, acknowledges your financial needs, and sets a direction for your future financial activities. An individual retirement account, or IRA, is the most popular retirement account because it is a tax-sheltered retirement plan in which people can annually invest their earnings up to a certain amount. Estate planning involves the accumulation and management of property during one's lifetime and the distribution of one's property after death.